All right. Hello, everyone. Welcome to FX Street. This is Mark De La Paz from FX Instructor. And welcome to LTR here in FX Street. Okay. So, it's Wednesday, and it's been an exciting week. We've had some very nice turnarounds in the market. And what else? Guess what? We are expecting a more market moving data. We're expecting a lot more key issues going forward. The Dubai issue for now is over and done with. We're no longer concerned with that. It's clear that Dubai does not pose a systemic risk to the global economy. So, what's the next key issue for us? Well, let's take a look at the calendar. There are expectations that in tomorrow's ECB meeting, the ECB President Trichet will be indicating that the bank will start withdrawing some of its stimulus tools. We're not quite sure yet just what exactly Trichet will be saying. Speculations are that he will be cutting the flow of free money for the banks. Okay, last tender offer for easy money. And if it does that, what would be its implication? Well, if the ECB enters into an exit strategy tomorrow, it does suggest that we might have some downside risk for financial markets. I know most of the rally that we have seen for global equities have been funded by free money out of the US, but a withdrawal of the stimulus efforts by one of the major central banks could lead to volatility and opens the possibility of us seeing that nice bounce that we have had from the equities, or that nice rally from the equities turning around. So a big risk, and one of the key reasons why so far we haven't seen a lot of price action in our charts. Now, let's take a quick look at today's calendar. Anything that we should be watching out for? We have the ADP employment change numbers coming out of the US. For me, the only key data for us going forward, or at least for today, consensus forecast here calling for a minus 145,000 lead. If we do get them as expected, excuse me, if we do get them as expected, I won't necessarily react. If we get them at 100,000 level, to me, a confirmation that the NFPs on Friday will meet the consensus forecast. Fed Beige Book. Yeah. It's difficult to assess the Beige Book. You'd really have to read what it's saying before we can come up with conclusions on whether it will have a positive impact for the markets or a negative impact for the market. It's more an anecdotal set of evidence for us on just how well the economy is doing. But yeah, something to watch out for, but not necessarily a figure that one would be able to interpret beforehand, or one could plan on what to do beforehand. We have to see what's there later. Anyway, let's move to the charts, and I think Mirko's take a look at the dollar index. Is it going to 71.72? Well, let's take a look at the dollar index. That's dollar Swiss. Dollar index is this. What are we seeing? We have we've been seeing continued weakness for the dollar index. It's actually, that is a withdrawal of liquidity by the ECB. That's tomorrow. Will at the same time though, they've had an emergency meeting. Yes, necessarily mean that we could expect the dollar index to drop. Okay. To me, a key issue would be, will we be able to actually maintain the end of December? You have a lot of big traders out there whose bonuses would depend on just how much money they've made for the year. a lot of big traders who would like to lock in their bonus already. So that means the risk for me is actually bouncing rather than pushing through 74.11. I know it sounds heretical, but let us wait for the ECB's statement tomorrow and just how aggressive the withdrawal of liquidity would be. So, Mirko, for now, I could look at the charts and I could say that you've got a lower lows, lower high situation. You've got sell signals from your indicators. You have a 74.11 price point to break. But depending on ECB's statement tomorrow, the picture could easily change, especially if it turns out that the ECB is very aggressive in its withdrawal of the stimulus funds. Okay, so that's how I would view the dollar index at this point. I know it sounds theoretical, but let's see the markets. So because of that ECB issue tomorrow, we haven't really seen a lot of risk taking in the markets. Asian markets earlier, bullish divergence on indicators. All right, so more reason for us to expect the unexpected. So, where were we? We're talking about how we've seen little action so far. In fact, the only thing that's moved today are your cable pairs. And from what I've learned, you've seen it congesting over the last 5 hours. In fact, you're testing the floor of your congestion over the last 5 hours. So I tend to think that the reason for, or that we're losing the intermarket perspective or the intermarket excuse for Aussie to push even higher. So bullish from an indicator's perspective, but price action telling us differently. Price action telling us you've lost momentum already. Now, how about the hourly level? Are they telling us continue to look for a bullish setup? Well, we still have that higher highs series. We actually still have higher lows. Yet, they're telling us MACDs are dropping. Normally, I would expect that a push to the overbought territory in the stocks would be a good buy signal. But to me, it's more like a last gasp for bulls in AUD/USD. You look at your charts, and despite that big white candle 2 hours ago, I'd rather note that you've had a series of spinning tops, even dojis at times. And again, you've failed to really to generate the next resistance level, a quick run. Look at your latest candles now. I'd argue that you've had another spinning top, one more sign of lost momentum, and then of course your latest candle is an inverted hammer. So the risk for me as far as the candles are concerned is that we are already topping off, or we have already seen the top just yet. So I would be shorting this anytime soon. Rather, I would say that we are unlikely to see substantial upside from here. Now let me take a look at 15 and my MACDs upping off. I have a potential bear cross on the stochastics, or I actually have a bear cross already. Influence of sells are developing in the 15-minute level. From a 5-minute perspective, you actually have a bear cross in MACD, a bear cross in the stocks. So looking at this, I tend to think that Aussie, while too risky for me to say that it's time to take the short side of the market, although I tend to think well resisted now, and clearly you're developing a confluence of shorts. Better to real confluence thinking, rejection from the 93 area before we start thinking, let's ease off, test the congestion supports at the 92.60 price point, perhaps even see a pullback to that 23.6 fib level, your congestion floors from before. Normally, I would look at things from a broad market view. I have these templates where I would have the broad market view, all the euro contracts, all the cable contracts, all the yen contracts. And normally, for me to say that one currency is stronger than the rest, well, say I'm assessing euro. Is euro stronger than the rest of the market? If I see that in all these charts, euro, then I would argue that's the strongest currency that we have right now. Okay, so it's a matter of multiple charts, multiple or having the seeing the action. If there's across the board action, sign for you that generally I would suggest that you actually set up a profile where everything's, you tell yourself there is a lot of bears or there are a lot of bulls in that currency. Ed's dark cloud cover in euro. Is there a dark cloud cover there? I don't really remember seeing one. But let me see. The only potential dark cloud cover that I can think of is, and is that what you're talking about? Is that what you're talking about here, Ed? Oh, all right, okay. Well, the fact that we've bounced off the trend line support and had that very long tail, yup, it has paid out. If you're a strict candlestick person, then you'd wait for a break of the high at the 51 price point, but available. But then that March, and this is the at the open of European market, we've had very little price action, and I took a look at the calendar and said, oh, looks like people are already starting to be cautious ahead of tomorrow's ECB. So what do we have here then? While I tend to be bullish in EUR/USD from the big picture, I have that bullish stochastic, I have a bullish MACD, time that we take out the 51 resistances, very cautious, and I would tell myself, looks like another range is in the making. Okay. Overall, or if you ask me from a long-term perspective, I would say, yup, I would look for euro to continue to push higher. But in the meantime, until you see a close above 5151, this is likely to just congest for a while. And when you turn to the lower time frames, you're getting more evidence that that congestion for a while scenario to happen. From an H4 perspective, you cross in the stochastics. From a timing perspective, you may want to wait for the next bear cross from the 5-minute stocks before you try to do anything. Preferably, I would want to be under the 5074 price point when I think of pulling the trigger. Okay, so a bearish setup developing. It would help the equity markets would start dropping already. How are we doing there? Well, you have new lows in FTSE, same thing in CAC, same thing in DAX. So it looks like things are those signals. Then I'll just tell myself I can afford to miss out on the trade. Okay, although you do have a lot of developing bearish arguments. Okay, you have a lot of developing bearish arguments, but before you can actually say join this. All right, guys, let me move back to overview. Any specific currency that's that anyone wants us to look into? What's going on? All right, looks like gold is under 1210 again, although failing to generate a sell-off despite that breakout, close under the 1210 area. If you look at EUR/GBP, you've actually triggered a pattern. You've triggered a double top before. That double top more than met its objective. Now you've triggered a head and shoulder pattern in your price chart. The price objective of your head and shoulder pattern is technically this, around the 89.75 price. But I would note that, let me see this in 15 and 5, and have an entry. From a 15-minute perspective, we have a bearish MACD, but a bullish cross will continue to push top. Could actually try to make a run for the 61.8 fib level still. But that fall in gold is new. It's happening only now. So that means we have to go to even lower time frames. Cautious market tend to think limited ranges could be expected. So how do we look right now? You look at it from a daily perspective, you can argue that you have a very bullish looking setup, a bullish divergence from this activities. You get a bullish cross here. But problem is the lack of willingness for people to move in, the lack of willingness for people to position. Again, those guys who bought GJ earlier were commercial interest. They needed to buy GJ. They weren't trading it for profit. Or at least I don't think so. You look at your MACDs right now from an H4 perspective, and you have a bullish MACD. Again, you've broken through the resistance line in your daily chart. You're coming off the overbought territory in stocks. All right, that's fine. Something that I'd like to look for. If indeed GBP to sustain its rally, we need the stochastics to re-enter overbought territory to generate a new bullish cross. If it does that, then I would argue a good uptrend is starting to develop in the market. Okay, you already have a higher low, higher high situation in GBP USD. I could confirm that by generating a new bullish cross in the H4 stock. A re-entry of overbought territory would typically suggest that an uptrend is developing in the markets. Rob, what do you mean by why? Why not for a profit? That those commercial interest in GJ? Well, I'm not the. Okay, I don't know which dealing room, which bank they went into. I just heard about it. Let's put it this way. They probably had a need to buy GJ. Maybe they were a Japanese firm. I don't know. I didn't know the details. I only heard that there was a commercial interest behind GBP JPY's price action earlier. We have to remember that while 80% of the currency market is speculative trading, there is that 20% of people who actually buy and sell currencies because they need to. They are exporters, they're importers. They need to pay stuff that they bought from overseas. So it's those guys that probably went in and bought it up, caused that spike on the upside. If you look at the calendar, we don't have a lot of things right now to suggest that speculative interest is available in the market. All right, let me check out the hourly chart here. GBP USD, a new bullish cross in MACD and stochastics. Further arguments for us to be bullish, but not exactly an argument to initiate a new trade. You look at the 15-minute charts, and at the moment, a suggestion that you ease off. You look at the 5-minute levels, and you're getting a mixed picture. So breakout though, your tight congestion here is likely to continue. MACDs are dropping. You have a bear cross in stocks. So it actually opens the potential for pushing under 72.47. Now would be a good time to ask, what is the next support if 72.47 gives way? Well, you have something very close by, 72.13, 72.17 area. Notice I'm not using fibs in this case. I normally don't use fibs if I can establish congestion points. and this market is all about congestion.